Ajay Shah, Senior Fellow with NIPFP, joins us live from New Delhi. Ajay, always fantastic to have you back on ET Now. Thank you for joining us. Ajay, too much is happening too quickly, but do you think policymakers are pressing all the wrong buttons without consideration? A lot of news is coming out, a lot of measures have been announced, but those measures are not helping the rupee at all.
I'm not surprised. I think that a lot of these measures are precisely wrong. These measures damage confidence and optimism about India, and they will hurt the rupee and the Nifty.
So what needs to be done?
I think that the first and foremost thing is that we need to reverse all the actions which have been taken in the last 3-4 months. In the case of the reversals of financial development and capital controls, we need to go a little further back to 2011, because this whole thing of trying to close down the economy began a bit further back. So I think the first thing is to accept that there is a mistake and to back out of this place. The second thing is that there is a lot that we can do in terms of bringing in stable financing that will assist the current account situation, and the biggest pieces that are required there are to set up a proper QFI framework, to open up the capital controls on foreign investment in the rupee-denominated bond market, and to remove some of the tax problems that are hampering foreign investment. So I think this kind of program will be far more effective.
Do you also feel, Ajay, that perhaps the RBI should rather support growth and try and work towards making the macroeconomic picture and perhaps leave the rupee to find its own feet, because you've got the other parameter, which is the dollar strength as well, which seems to be working not in favor of the rupee?
Yeah. Above all, we should not do harm. As an example, take the action that RBI has made yesterday. This is about modifying the prudential regulation of banks so as to achieve some short-term goal about whatever is going on in this dogfight on the currency. Now I think that is an illegitimate decision. The powers of prudential regulation should be used for only one purpose: to make banks safe and sound. To use these powers for any other purpose is just wrong. And this is something that we in India do all the time, that an agency is given powers and he treats this as a carte blanche to do what he likes. Similarly, if you look back on the last 14th, the RBI announced capital controls. I think these kinds of things are really damaging, and we should not be doing them. So the first thing we should have in this field is a Hippocratic oath: don't do harm. If you can't figure out what to do, do nothing.
Ajay, you've always maintained that financial markets, they will adjust, and the nature of the financial market is that they adjust very sharply, and when they adjust sharply, policymakers, they get scared. So how does one figure out that what is the real level for the rupee, and at what level rupee will become competitive? Because rupee has to get competitive for the economy to stabilize.
So we know qualitatively that rupee depreciations are good for the economy. We also know that it takes time for these effects to play out. This is a story that will play out over 12 months to 18 months. Nobody knows what is the correct level of the rupee. So, I don't know. And if anybody claims that he knows, he is wrong. Nobody knows what is the correct level of the rupee. This is something that is made by a market, and it is not something that anybody can have a second guess on. It's like asking me what is the correct level of Nifty. Nobody knows what is the correct level of Nifty. That is why we created a financial market, to look into the future, have lots of speculators who are optimistic, speculators who are pessimistic. You put them together in a market, they give you a price. That's our best estimator of what's going to happen in the future.
But given the kind of macroeconomic picture, the currency weakness, and more importantly, just question marks on what the government is going to do, not do in terms of supporting growth, you do believe that there is further weakness in store for equity markets as well?
If we go down the route that we have begun, that of reversing economic reforms because we think that the rupee is more important, then this damage is going to amplify and get worse and worse. Let's pause to think about what comes next. Okay, so the policymakers who tried to have a rupee policy have failed so far. Now you have a choice: either you double or you quit. Suppose you decide to double. What will you do next? Next, you will have more capital controls. You will have more trade restrictions. You will have more damage to the financial markets. You will have more damage to the banking system. That's where we are going. We've really got to ask ourselves, is this a direction we want to go in? But if the government persists on this strategy of trying to use all levers of policy to try to do something about the rupee, then we are in for a much more precipitous collapse of the rupee and of Nifty.
So do you think government should not increase import duty on non-essential items? They should not make luxury cars, luxury smartphones, cashew nuts, apples, mangoes, oranges more expensive?
I think we have a fatal loss of institutional memory here. Over the last 20 years, we have done enormous work on trying to make India an open economy. Manmohan Singh always talks about an economy where we are an open economy and we are open to ideas and so on. Trade liberalization is absolutely basic. It is an absolute foundation of trying to become a modern economy. India should have absolutely no restrictions to free trade of goods and services. Things should move up and down the boundary. That's a foundation of how we can become efficient, how we can become productive, of how we can welcome ideas coming in from all over the world. Maybe an idea in the shape of a new variety of an apple. Okay, a government that starts meddling with trade reforms, which starts reversing trade reforms, is rolling the clock back all the way to the early 90s. I think that's a very big mistake. We should just not do that.
Do you think the easy quick fix could be fix the diesel prices, take a big jump? When a similar crisis appeared in 1990, I distinctly remember there were big policy measures which were announced. The government had, stopped selling diesel after a certain time. There was no fuel available for, commuters on Saturdays and Sundays. Do you think we need such a desperate measure when it comes to the fuel policy now?
I would really pause to say, why are we so desperate? What is the grave problem that we need to solve? Okay, so this is not 1991. We don't have an administered exchange rate where all transactions go through the RBI, where all capital flows go through the government. Okay, can we relax a bit? There is no crisis here. There was nothing going wrong on the rupee market that needed fixing. We were doing fine on our own until the government thought that they have to do something about the rupee.
So, final question, do you think now the supply dynamic or the demand dynamic could change now? Exporters eventually they will start getting more demand and imports will start reducing because of this big change in the rupee price. I'm sure the import and export dynamics eventually will change. The reflection may happen in 6 months, it could happen in 2 years, but the reflection will eventually happen.
Yes. If you go look back at the 70s and the 80s and the 90s, many countries got themselves into deep trouble. There would be an IMF program to fix up the country. For example, India in 1991. An important component of these programs is a large depreciation. Okay? Now, large depreciations work wonders. They increase the viability of export. They improve the standing of Indian firms who are competing with imports. And more generally, in the entire tradable sector, they increase realizations and profitability. This works gradually. It will take 6 months, 12 months, 18 months for the effect to work through the economy. But it will have an impact on corporate profitability and ultimately on corporate investment.
Ajay, always a pleasure to have you on ET Now, and the way you just break it for us.